Hello, welcome to the second event of day 5, the final day of the Brighteye Edtech Startup Festival. To those of you for whom this is your first event, a warm welcome. I'm Reese, Brighteye's Head of Research. For those of you that aren't familiar with our work, Brighteye is the most active EdTech-focused fund in Europe, with interest spanning the sector from early years through to lifelong learning, everything in between. And we partner with companies in the early stages, supporting them in pre-seed, seed, and Series A rounds with both investment and thematic support wherever we can be most helpful. And this work and the festival has shaped the program that we formed here, and the themes that we've covered across the week, as hopefully you're familiar with if you've signed up for this event. So this afternoon, this is our penultimate event of the whole festival. We're focusing on market trends and exits in the EdTech space. We're really looking forward to what promises to be a fantastic session. And as I mentioned at the top, this is going to be moderated by Hannes Akmeyer, an associate here at Brighteye. So delighted to hand over to you, Hannes, and I hope everyone has a great event.
Thank you so much, Reese. Hi to everyone. As Reese already said, Hannes, I'm an associate at Brighteye. Also from my side, thanks to you all for showing up for our little meeting today in a Friday afternoon. Don't want to waste too much time now on my end. We have 2 amazing keynotes waiting for us. And I will just give the speakers the time to introduce themselves once they're doing their keynotes. And the first one will be Tom. So Tom, stage is yours.
Perfect. I'll dive right in. My name is Tom Singlehurst. I head up the equity research team here at Citi that looks at global education, and this is interesting in of itself because 5 years ago there wasn't a role looking at global education. I was and still am a media analyst, and the role sort of evolved out of a series of thematic reports that we've been doing over the years. I was going to kick off straight with the presentation and take you through some of our sort of key views on education as a theme, and then more pertinently how it's viewed by public market investors. Hannes, would you like me to carry on straight away, or should we pause to let Carla introduce herself? Or
you can just carry on, Tom. And okay. If there are any questions in the meantime from the audience, feel free to just use the chat.
Perfect.
To write down his questions.
Excellent. Okay, so as I say, education. It's a relatively new phenomenon. A sort of public market equity research analyst trying to look at this space. But one of the key questions, and the kind of that really sort of started the whole venture, was education is a massive market. It's clearly very, very important. But it hasn't been a huge area of focus for investors. And very simply, why is this? Why isn't there more excitement around this, potentially fantastic theme? And our work, as we've looked at this over time, has tried to really address that question. The first piece that we published back in 2017 was very much focused on what's the value of education from a personal basis. At that point, companies like Pearson had been underperforming for almost a decade. A lot of the private college businesses in the US had almost been wiped out. There was a very real sense that somehow education was diminishing in value. And our first piece of work really went into the detail of ascertaining the benefit for individuals and for society from education, and came up with the reassuring conclusion that yes, education is valuable. The return is somewhat asymmetric across different markets, but overall, it's not only a significant market in sort of dollar terms, but the drivers behind usage and engagement are strong and likely sustainable. And in that context, this is a market that's worthy of serious consideration from private public equity investors. Over time, we've focused more and more on that opportunity. We actually followed up our original thematic report with a report looking at 6 or 7 areas of potential opportunity for private capital, incorporating areas like English language learning, professional learning, international private schools. But obviously, one area that got more focus than the others was EdTech, and that obviously became an increasing focus in the aftermath of the COVID pandemic. And our work, I think, supported a thesis that ultimately was quite obvious, which is that significantly that event, the pandemic, fundamentally altered perceptions of the importance of delivering online learning, and in reaction to that, there's been a step change in expectations around spend. We used that analysis to present this concept of the EdTech gap. Like all good ideas, it's entirely stolen from someone else. In this case, someone from my sort of old world as a media analyst, a very famous media analyst called Mary Meeker, who came up with this concept of the gap between the amount of time spent consuming different media and the amount of money spent on advertising. And she very famously not only sort of called the rise of internet and digital advertising, but predicted the inevitable fall of print-based newspaper advertising. But following that through to the educational world, we noted that there is a significant EdTech gap, and if the proportion of money spent on EdTech was equivalent to the proportion of time spent learning digitally, this could be over time an almost $3 trillion market versus a tenth of that today. Most recently, we've carried on our thematic work looking at the opportunity in particular in enterprise learning and development, and that's partly selfish. We spent a lot of time talking to City's own learning and development team to explore what's keeping them busy, and as with many people-based organizations, we're facing challenges around finding the right people with the right skills, and there's a growing realization that we can't just fire people and hire them at will, especially in a tightening labor market, and that obviously throws up a lot of opportunities. That's our, as I say, thematic view. The question, of course, is, do people broadly agree with us that there is an opportunity? And for that, I thought I would take two distinct approaches. One is pulling together some work by our quantitative research team on education as a theme, and then I'll look specifically at some of the companies that we cover and sort of earnings and valuation trends. Starting with the former, our quantitative research team regularly conduct a piece of analysis which they call the global theme machine, which looks at the attractiveness of about 90 global themes. Now, these are themes that are then mapped against our company coverage, and we, as a research department globally, look at about 5,500 listed companies, and we go through each of those companies and map them onto the various themes that we think are important. And this, education is one of those, obviously, but you should also think about areas like hydrogen or water or diversity as sort of distinct themes that, in particular, ESG investors might be interested in. Just to set the scene, the education theme basket, as we note here, is made up of global stocks belonging to a number of sectors, but the ones that are most significant in the mix are consumer discretionary, IT and communication services companies. There are companies with an education angle across industrials, financials, healthcare, and consumer staples. the disappointing news is that if you look at education as a theme over the longer term, it has underperformed the broader market. The interesting thing, as you can see from this chart on the top left-hand side, though, is virtually all of that underperformance has come in the last year and a bit. We obviously have a fairly clear idea of why that's happened. Obviously initially triggered by regulatory change in China, and then perhaps accelerated by a sort of broader rotation away from growth into value at a market level. But to put some numbers to that, education has underperformed by about 30% since the beginning of last year, which is a relatively significant underperformance. To put that in the context of other themes, it leaves education right at the bottom of the pile, sadly, from a public sort of market perspective. And by the way, here you can see some of the alternative themes that we map. Some themes at the top here performing well, you would sort of expect, like hydrogen. Perhaps areas like mining capex and nuclear energy have come more into focus in recent months. Why has it performed so poorly? The answer to that is that it's perceived as being risky, and here our quant team sort of try and map the factors that are driving perceptions of risk for the various themes that they track. And for education, the themes that it seem to be sensitive to based on their analysis is credit risk. This is the risk that companies have too much leverage, currency risk, and this exposure to interest rate changes, which I think probably is particularly pertinent in the case of Edtech, where a lot of the value is in the out years, and you have to discount it back as a public market investor, and using a higher discount rate obviously impacts your perception of the net present value. But there is some good news as we look at the team's measurements of fundamental attractiveness. Actually, although it had a very tough period over that the end of last year and the beginning of this year, in recent months its fundamental attractiveness has started to improve, and that, I think, is gives us a little bit of encouragement that we've found a floor in terms of sort of public market perceptions. But I think there is still, as I say, some way to go in terms of giving the public markets comfort that this is a safe space to invest in. And maybe we'll talk in the panel discussion about how we could go about making that a bit more concrete. Briefly, that's the top-down theme analysis. As I mentioned, we at Citi cover around 30 companies across the world exposed to education directly. I think the key point that I would say is that whilst my quant brothers and sisters look at this as a homogenous blob, actually the sector itself is anything but a homogenous blob, and actually share price performance has been quite different subsector by subsector. As you can see in the middle of this chart, areas exposed to educational publishing, for example, have performed really very, very well. So I think there are a couple of things that are interesting, stroke surprising. By the way, all of these figures are over the last 12 months. One is not on the EdTech side, we have seen relatively poor performance, which is, I think, a function primarily of that sort of broader rotation from growth to value. But what is more surprising is that areas like, in particular, higher ed, which have traditionally been deemed as counter-cyclical, and have underperformed to the extent they have. I think the point there being, we would ordinarily expect the market to be more comfortable on higher ed exposed companies in a more challenged macro environment, because demand for higher ed itself has historically proven to actually go, if anything, go up in a more challenged macro environment. When we look at the drivers of performance, actually, earnings have come under pressure to a degree, but it's actually not that significant. This has largely been a function of derating, and apologies, this is almost impossible to interpret. But the main point is on the last 12 months. The red and orange is largely seen in the multiple expansion stroke contraction column, i.e. It's less about earnings, it's more about multiple. And that gives me some hope, because it reminds us that this is largely a question of perception. Now, in terms of what we're interested in as public market investors and what we're talking to with our investing clients, we're conscious of that point about risk. This is a sort of broad map of the kind of companies that we cover and where they sit in terms of stage of education and whether it's more formal learning or more supplemental learning. I think it's fair to say, from a risk perspective, we're focused on companies that have more exposed to adult learners, and that's partly a function of strong structural demand, but also, let's face it, a more accommodative risk profile, given less chance of regulatory intervention, and linked to that, a slight skew, I think, towards the lower half of this chart, i.e., areas where there is a direct-to-consumer sort of motivation, I should say, for engagement. We still think enterprise L&D and adult learning is an area that is very, very interesting, and we reflect that, broadly speaking, in our recommendations. I won't necessarily say it's a concrete plank of everything that we like, but as a thread running through the names that we're more optimistic on, exposure to either higher ed or the adult learning or career learning opportunity is definitely something of a theme. I will leave it there and hand it back to Hannes and Carla, and then hopefully we can pick up on some of these themes later on in the panel discussion.
Thank you so much, Tom. That was a great overview. Maybe one quick question already now, if I may. I find super interesting that you showed also how the L&D budgets basically rose over the past months, years on the company side, and in the end also mentioned as an interesting sector from a public market perspective. Do you already have data? How do you see it developing now with the economic crisis, sort of tightening budgets, maybe on the company side? Do you have any data on L&D budgets? How do you see that developing over the next few months?
Data is a little bit, really concrete real-time data is a little bit hard to get your hands on. I think, it is fair to say, however, that there are some trends that come out of conversations that we're having just in the last 2 or 3 days. We've heard from Coursera, Udemy, 2U, and obviously Skillsoft, all of whom have exposure, sort of direct or indirect, to that space. And what I would say from their comments are, one, there is a very legitimate concern amongst investors around the cyclicality of investment in L&D, i.e., sure, companies like Citi say they're committed to reskilling and upskilling employees, but when push comes to shove, will they really follow through with it? And then the concern is they won't. There are some signs that those concerns are well founded, in particular at companies like Skillsoft, who've talked about pressure in, for example, some of their sort of formal sort of face-to-face or sort of instructional businesses. But what's interesting is those companies that are sort of more geared to the pure technology side. I think actually are painting a slightly more robust picture. By contrast, let's say a Udemy is very explicit that it isn't seeing necessarily any major pressures on its on the outlook. And what's interesting there is it supports the contention that okay, there may be some caution in actually spending money to put people in the classroom, which is natural because it's expensive and quite narrow, but the sort of broader commitment to making sure that there are resources available is still there. And I come back to it. City itself is very committed, and that talking to the people internally gives us comfort that there is a strong structural component to growth in that space.
Got it. Thank you so much for these insights already. And yeah, I will just hand it over to our second keynote speaker for the session today, Carla. And please, introduce yourself, and stage is yours.
Sorry, can you see my screen? Cool.
Yes.
Okay, perfect. Oh, sorry, wrong. Okay. Cool. Hi, everyone. I'm Carla Napolião. I work at Derum as an Edtech specialist. I'm really excited to be here today to talk about the VC investment and value development of global Edtech companies in the last couple of years. Some background about Derum. We were founded in 2013 in Amsterdam, where we are based, and we are a global data platform for intelligence on startups, high-growth companies, investment activities, and ecosystems. Within the team, as I mentioned, I cover everything related to the sector Edtech, and together with our partner Brighteye Ventures, last year we launched a dedicated Edtech platform that is meant to be a comprehensive database that keeps track of global Edtech companies, funding rounds, and of course is aimed to provide trusted insights into the space. And all the data that I'm going to show here today is mainly through the use of the platform. So for today's session, actually, we'll dive into the value creation in global Edtech and how it has been developed. Then I'll give a quick overview of the VC investment landscape, and then also touch upon the exit opportunities and consolidation in Edtech, and finally ended up in a brighter outlook, mention a couple of sort of opportunities or trends that we are particularly excited about, and hopefully that sparks some discussion in the chat and in the panelist discussion after. So, starting off with the combined enterprise value of public Edtech companies, unsurprisingly, we see that a similar trend in various sectors that we keep track in Derum. And just for a note, we keep track of this analysis based on startups founded after 1990, according to Derum's definition of a startup. Anyways, the combined enterprise value of public Edtech companies has been through impact over this year compared to last year terms. However, how we actually view this narrative or story is that public exits in Edtech are still quite a novelty, and that public traded value still represents only a fraction of the overall Edtech sector. So in private companies, we still see growth up 11% compared to last year value. In terms of benchmarking Edtech against other sectors that we keep track, oftentimes Edtech is viewed as the underdog. However, when we look at the combined enterprise value of public and private startups, we see that actually the sector itself is performing better than a much bigger markets like fintech or health even. Looking into the regional analysis within Edtech companies, we see that Europe, which is the smallest region by size, is amongst the fastest growing. So actually, in terms of value is up 2% compared to last year, slightly higher than the US and only second to India. Still about the value creation, we also are looking into the number of unicorns created so far. Just a note here, at Ethereum, we consider a unicorn as a rapidly growing company that has reached 1 billion in valuation basis on a funding round, acquisition, or IPO. In terms of the number of Edtech unicorns created, we've seen that so far this year, 9 unicorns have been minted so far. In terms of comparison again to last year, has definitely slowed down, but we expect to match the 2020 levels if we continue, because in 2020 there was we tracked 10 unicorns created, and this year we already reached 9 in the first 8 months. Moving a bit to the analysis on the venture capital investments in Edtech startups. Again, we base our analysis mostly what happened in the last few years. So, of course, in comparison to 2021, there's a considerable decline. So far, Edtech startups have raised 7.4 billion in 2022. But in terms of expectations, we see that it most likely will match the 2020 levels. In terms of where this decline is happening, definitely we see it as later stage than early stage. So 2020 and 2021, we saw that mega rounds were actually accounting for an increasing share of the global Edtech VC investments. In 2022, we're seeing there are far fewer mega rounds happening. So the size or the share of mega rounds has decreased in overall VC funding. As mentioned, early stage is not as impacted as a later stage. The first half of this year is the third strongest period for early stage investment globally for Edtech startups, and still up more than 30% compared to the same period in 2020. And within our analysis, we also are sort of starting to see some interesting changes in terms of the medium round sizes of global Edtech. For this analysis, we actually use self-labor rounds to have a better picture. So while early stage round sizes are still on an upwards trajectory, we've seen that later stages, so everything from Series B plus, has shown signs of decline after a peak in 2021. Still on the VC funding side, and going a bit more into the regional analysis, again, Europe stands out as showing really strong signs of resilience. Actually, the region has its best periods in the first half of this year, accounting for more than 20% of the global Edtech funding. And finally, in terms of sort of analyzing the segments, or the core Edtech segments, which we define as pre-K, K-12, corporate learning, higher education, and lifelong and consumer learning, we've seen that globally, all segments have slowed down compared to last year, with pre-K and higher education actually being hit the hardest so far. Another point that we also are keeping track of is definitely M&A activity and IPOs and SPACs within the Edtech space. We've seen that last year was definitely, I think, the year that Edtech exits broke. And in terms of more companies going public than ever before, this year we definitely see sort of a freeze as companies going public, but M&A activity is still holding strong in comparison against 2020 levels, which is matching. this is quite interesting within the space, is that M&A activity still holding strong. And then we also see that companies that were able to collect bigger checks and higher valuations in the last 2 years are actually starting to acquire smaller to medium-sized operators. So of course, we have to mention the prominent example here, Valuations, which has been on an acquisition spree for the last 2 years. But also in Europe, we are already starting to see market consolidation as well. Examples such as GoStudent and Kahoot as being some of the most active players in terms of consolidation. Beyond the analysis that we are conducting in terms of value and VC investment, we also wanted to leave off with a sort of a brighter outlook about the sector and how we actually envision or sort of what we believe the potential of Edtech, a bit to how Thomas has presented. We definitely agree that despite this year showing signs of decline in VC investments and exit opportunities in terms of public listing, I think Edtech as a market represents a very small fraction actually of the education as a global consumer market. So we've seen that global market cap for Edtech companies is around $300 million, and VC investment since 2019 is roughly 50 billion. However, education as a market is a $6.5 trillion opportunity. So in terms of what to expect, and we definitely see some trends or some sectors that we just are excited to learn more about and analyze it a bit further. One of them has been corporate learning, and we have published some content around it as well. Where I'm seeing that this year is taking up a bigger share, let's say, of the VC investment pie in comparison to 2020 or 2021. And more exciting even is that European companies are a bit ahead of the curve, as they are contributing to more than 30% of the global VC investment into corporate learning startups. Another sort of trend that our partners at Brighteye actually are keeping track of is senior learning as a niche, but also an opportunity, especially in more sort of developed regions or nations such as Europe. Because we know that there's by 2050 there's an increase of more than 40% of the senior population in Europe, for instance, and how we keep this part of the society engaged and integrated even is super important. And of course, we're seeing startups already coming up with really interesting solutions, and you can read more about it actually in a deep dive by Brighteye as well. So this is some of the insights that we are keeping track and sort of trends as well. This report that as is presented is in the works and is going to be published very soon along with Brighteye. And of course, if you have any feedback or questions, let me know. At Deerroom, we keep track of various industries, including Edtech, as I mentioned. And you can also, of course, subscribe to our newsletter to keep track of the work we do. Yeah, that's basically me.
Thank you so much, Carla, for this insightful presentation. I think really, really great data and a lot to explore in there. Yeah, and I think we're now ready to start with our panel for the second part of the session today. For the audience, feel free to post any questions already in the chat or also to raise your hands. Happy to also have you ask questions, of course, to our panelists. On the panel now, we welcome Tom and Carla. You already know them from their keynote just now. And we also welcome Felix, who just joined us. So Felix, can you just briefly introduce yourself?
Hi, guys. Really great to see you. I'm Felix. I'm one of the co-founders of GoStudent. We are building a global school connecting children in the age of 6 to 19 with world-class teachers, and excited to participate in this panel note now.
Thank you so much for joining us. And yeah, maybe let me start with a question for you. We've now heard a lot from Tom and Carla about edtech trends, recent developments, subsectors, and how they are developing. For you personally, and then I was also curious about Tom and Carla's opinion, but for you, are there any areas, sectors, sub-verticals you're right now most excited about in the broad edtech space?
I mean, personally, I would say I'm a bit biased because we operate in the K-12 sector. One thing to highlight here, we see two mega trends right now. There's one mega trend, which is global teacher shortage. Yeah, so most of the education systems on a global scale, they have a massive teacher issue. Just recently, I think last week, a survey of the Californian teacher community showed that about 70% of the teachers, they actually want to quit their job. So this is kind of a universal picture you see globally. And this also has the effect that more and more families, they are looking for alternative options outside of the regular public school system. The second trend is we have seen that the COVID pandemic actually had a pretty negative impact on the learning journey for many children around the world. So depending on the country, most kids had learning gaps between 4 and 15 months, depending on the school system and how advanced it is. So also that showed there is like now a massive need for additional education. And I feel and I hope that in the K-12 sector, we will see many, many more companies and innovations that help to solve this teacher shortage issue and also help children all over the world to drive to better learning outcomes and prepare them for a better future. That's why I personally feel super excited about that field.
Perfect. Thank you. Maybe Tom and Carla, anything you wanna add to that? What do you personally see as most exciting subsectors, trends, verticals right now? Maybe Carla, if you want to start, because there was also one question in the chat directed to you, if there are any trends regarding tool, content, platform that you consider relevant here.
Yeah, I think there's a lot of interesting things happening in the space. What I've been keen to learn more about is actually the gamification of learning. And I think it's something that we talk about, but I think gamification is in a lot of different tools and platforms that we use. What I'm interested in is how can edtech companies actually take sort of the familiarity of gaming into learning experiences. So how can students even do their homework, or how it can be integrated in a classroom. So whenever I try to read more about the topic and see what companies are coming up with, it's definitely a topic that it's sort of not a segment but a niche, let's say, even, or that I definitely want to hear more about. I think I mentioned corporate learning, and I think Tom also mentioned this earlier, right? In terms of, are indeed companies filling up with their sort of commitments in expanding the necessary resources to actually have solutions integrated into their teams? That's a big question, but we still believe that there's quite a good potential within this segment in edtech, and I think we definitely want to also research more about it. Even on what we first think of, even apprenticeships, for instance. So we have, of course, Multiverse being one of the leaders there. And I think those sort of alternatives in how we can integrate people into the corporate learning through different methods is quite interesting as well.
Thank you.
I don't know if I answered.
Yeah, and for my part, I mean, it's difficult to think of a company that precisely maps onto this exclusively, but the area that we're very interested in at the moment is sort of professional qualifications and credentialing, and bringing that into other forms of formal structured learning, whether it's sort of vocational learning and career prep at in a K-12 setting, or increasingly sort of professional qualifications in an adult learning setting. It feels like, out of university, for example, it would be very powerful if people could come out of degrees, not only with a degree, but with a portfolio of professional qualifications that demonstrate their skill set to future potential employees. And I think there's some really interesting companies that are doing that, either selling into campus or selling into corporates and enabling individuals to show off what they've learned and their skills.
Super interesting. Got it. And yeah, maybe staying at this macro level for now. And we've now seen also in your presentations how India, for example, is still growing way quicker than most other markets in the edtech space. And also maybe looking at you, Felix, first. You have lots of experience now of expanding to other markets from building Go students. When you just look at Europe, are there specific markets, geographies in Europe that you currently see as most promising or that are hugely underserved and present a really good opportunity for edtech founders at this stage?
I mean, Europe has historically been always a bit trickier because it is not one big homogeneous market as it is maybe in India or in China or maybe even in the US. For us, as Go Student, we have 5 markets in Europe, which are in terms of size contributing to more than 80% of revenues today, which is the German-speaking market. So Germany, Austria, Switzerland, France, UK, Spain, and Italy. So these markets today contribute to the largest piece, but we see in most markets in Europe like really good growth potential. Turkey, for example, Turkey is one of our fastest growing markets where the services work quite well. Poland is also like super interesting. So yeah, I feel Europe is still very much underserved when it comes to really good edtech platforms.
Got it. Is there Tom, from an investment or more public perspective, what are the largest differences that you see here from an attractiveness standpoint if you compare the European market to, let's say, the Asian market or US?
I mean, look, I think right now the situation we have is a bit tricky. When you look at the public companies in the education space, the public companies, they were hit pretty hard. I mean, most of the public companies, they lost a market value of like up to 80%, starting from Jack, Udemy, Coursera, also more traditional ones like Konya in Brazil lost 90% of market value over the last couple of years. So it's I think on the public side right now, I think my estimate is we will see a couple of private equity folks getting into the market and buying the public ones kind of for attractive prices and actually make them private again. But this market environment on the public side also led to a massive decrease for late stage growth companies in the education space. So this is definitely one trend we see. The other thing is, I think on the earlier side, we still see a lot of like deals happening. So if you have like a really robust product, you have a big and growing community of learners that use your services. And speaking particularly about the K-12 sector here, I think you can definitely raise good earlier stage rounds and maybe also potentially sell to some of the larger players. But yeah, I think overall in the education space, the combination of business model, show a clear business model. How do you generate revenues? How is your community growing? What are the learning outcomes that you provide? And also what are potential exit scenarios? You need to clearly show that, I think, to attract investment. And then it works, I think, all over the world.
If I can jump in, I would love to just make sort of slightly explain public markets, but also defend them. But as Felix says, the frustrating thing, as Ben Graham observed, I think it was Ben Graham, in the short term, stock markets are a voting machine. Obviously, in the longer term, they're a weighing machine. That's the sort of the philosophy behind it. So, in the short term, everything that we've seen, in particular in education, I think, is about perceptions of risk. And yes, there is a broader sort of rotation from growth to value, driven by rising interest rates, which does make a difference. But some of the factors impacting, for example, after school tutoring in China are very idiosyncratic and don't apply. They're not relevant in Europe, and it's just going to take a little bit of time for the market to get comfort with that. But I'm sort of hopeful that actually over the longer term, as Felix mentions, as companies deliver and demonstrate that they've got that sort of resilient profile, actually you will see stabilization and support. And actually one thing that does give me hope is there is a lot of ESG focused investment capital in particular in Europe, and that if that can be put against some of these really exciting sort of European edtech and education themed investment opportunities, that could be very, very exciting over time.
Yeah, definitely. Thank you for that. Maybe to stay for one more question on the topic of public markets and IPOs. I mean, I totally agree, Felix. So you already mentioned that we're probably going to see more private equity activity now in the edtech market. And Carla, you also showed the number of IPOs last year. It was pretty huge. And then this year, we don't expect too many. Actually, we also last year already saw a few companies postponing their IPOs. Was not sure when Valuations, for example, is going to IPO, right? It's also a question still to be discussed. What's your perspective on the developments there within the next years? When will we see a shift there again in the edtech space? And yeah, maybe then also be curious about your thoughts on that, Felix, considering Go Student stage, of course. But Carla, if you wanna chip in first.
Sure. For us, I mean, we mainly keep track of the private market sort of development within Derum, but it's hard to tell, right? I think we expect to see definitely continuing on the sort of the bigger players acquiring the smaller ones. That definitely still gonna keep on happening. But in terms of sort of when it go up again in terms of the number of companies going public, I think it's still to be sort of realize how this year is going to end, and then how the next year is going to develop. So for us, hard to predict. Maybe Felix or Thomas have other more concrete sort of feedback or opinions, but for us it's still sort of a broad playing field, let's say. We still need to see how this year actually ends. Yeah.
I've two cents from two comments from my side on that. One, I mean, there are some companies also on the public side that are beating all odds, like a Duolingo that still trades at like 10 times revenue for this year. I think in order to push the public side, but I think the overall investment ecosystem, you need to have one or two amazing like role models for the market. A bit like in China, you always had New Oriental and TAL Education. New Oriental and TAL Education, they are great businesses. Yeah, the one started in the early 2000s. They started building offline tuition centers. At the peak before the new policy regulation came into place in China, they did, I think, about 5 billion in revenue. They had a very profitable profile. They were listed on the public markets. They had a market capitalization of $30 to $40 billion. And they were like the moving role models for the whole education market there. And they showed building an ecosystem of different services, you can really provide a lot of value to the families while at the same time building a sustainable business model. And I feel we still need to have one or two of these cases also outside of China. And once you have them, they will be a big driver, I feel, for every other education market in that space.
Got it. Makes sense. Anything you wanna add, Tom?
No, I think I totally agree. The challenge with, even if I just think narrowly about my coverage of education companies over time, they've as fast as we can add them, they have a tendency of disappearing. Thinking about companies like Nord Anglia, companies like Navitas that have been taken private, and some of them have gone private and gone public again, as we know with companies like Instructure. But I suppose the semi-serious point about that is, I think Felix is exactly right. The situation with China was unfortunate because from for whatever reason, the policymakers in that environment decided to pull the rug out from underneath the feet of TAL Education and New Oriental, and that we wouldn't expect the same level of regulatory uncertainty in markets like Europe, in the US, and so it's just a question of being patient and delivering. And I suspect if the public markets persist in being skeptical, we're going to end up with more private equity involvement. And indeed, year to date, we have seen some big companies like Pearson subject to private equity interest.
Yeah.
One thing just from my side, and I feel this is something that everyone, especially here in this group of people and listeners of this panel today, can do and can have like a positive contribution, is also this intersection between the private companies and the public sector. Because also keep in mind, the bigger you get as an education company, the more you also have to face criticism of this, in the sense of, okay, you're becoming so big now, public education should always be like a public good. We don't want you to make money on that. So you always have this kind of like clinch between the private and the public sector. I don't want to open up this discussion now, but just to give you an example, in Germany, for example, if you cannot afford tutoring services as a family, your Landkreis, so kind of your local district, pays you for that. So you can choose like a local tuition center in your local neighborhood, and you get the money funded by the government to pay for that in case you cannot afford these services. And this for me is a beautiful example of how can the public sector, of course, it's very complicated to get this money and there's some bureaucracy around it, but it's a perfect example how the public and the private sector can play together. And the better these two sectors can play together, you have more entrepreneurs in that sector that can build really working business models, while at the same time you bring innovation in the space and you provide more value to the families.
Yeah, really good point. It's true. We got a few questions in the chat already, and I wanted to pick up one question from the chat. We talked a lot about general trends and sort of business models or subsectors that are trending. One question from the chat was, what main development of technology do you think will impact EdTech most in the next 3 to 5 years? So what's basically the main tech you see as most impactful? It's towards all of you three. Whoever wants to go first and try to answer.
I think, just to share one quick story from our end, I feel that on the virtual reality side, when virtual reality from a technology standpoint becomes more advanced, it has a huge influence. For example, we tested out which use case works well for kids using virtual reality in the tutoring context. And one of the use cases we found out works particularly well is learning languages, because the kid can actually sit in a class with other kids all over the world and they can simulate certain scenarios. So they can be, for example, in a virtual restaurant and they can practice their English skills, ordering some food or some drinks. This is something technology, you could never do that before. You cannot do this in a Zoom meeting or so. So I think virtual reality can have a big impact there.
Thanks.
Yeah, sure, I can go next. I think, again, going a bit on the content side, maybe through AI and other sort of technologies that allows, the content be adaptive to the learner, I think is super important in terms of, depending, of course, on the company's goal. And but I think sort of bridging that gap that everyone learns the same way is super relevant. And I think if there's more development in that space, then definitely sort of EdTech can be seen as in a creating even greater value. So I think that's something I'm excited to see, or hope to see, as a more interesting space to explore within the sector. Yeah.
Thank you, Colin.
I was going to steal sort of one of Carla's previous comments. Gamification and doing that in particular in the context of things like assessment. I mean, once again, they're spending time with cities, learning and development team. One of the big challenges we have as a financial services institution is we do there's a lot of regulated training. We do a lot of money laundering training and things like that, which is incredibly important. It takes an enormous amount of time, but the biggest danger, of course, is that it takes time and is ineffective. And so if you can simultaneously make that more engaging, whilst also making it more efficient, that potentially is a fantastic outcome. Because, as I say, obviously you do get bad actors in areas like money laundering, but for the most part, people that end up in doing the wrong thing do it because they just don't understand the rules properly, or worse, they think they understand the rules but don't. And so anything that can make, as I say, areas like assessment or sort of verifying skills that little bit more efficient, I think is very, very exciting.
Got it. Thank you, Tom. Let me just check. I think we have one more question in the chat and one more question we also got ahead of today's session already. I want to finish with, even though we just have a minute left, but I would be curious about, because I guess with a bunch of early stage entrepreneurs or soon to be entrepreneurs on the call here as well. And we talked so much about trends now, and I think it's probably similar with a bit of what you've touched already on, but it can maybe still be helpful as advice for people on the call here. So if you were to start a company in the EdTech space right now, just based on securing VC funding, and it's the whole white space you have ahead of you, whatever you want to start, what would you start? What EdTech company? Maybe interesting from your more macroeconomic perspective, Tom and Carla, and from you, Felix, as an entrepreneur. If it were not Go Student, what would it be right now?
One of probably the biggest mistake we did in the beginning, we listened more to ourselves, kind of to us as founding team, than to our potential customers and families and teachers that we want to serve. So really listening to the teachers. For example, if you want to build a company that helps teachers, really listen to them. Where do they have the pain points? How can you make their life easier? Or if you want to build a product that is targeting kids under the age of 6, right? Toys like a Tony box that maybe many of you know, that this speakers where you put some figures on it. Really like listen to the target group. Do they like it? And not just because you like it and you find it nice to have, then doesn't mean that this is a must-have for every parent. So really listening closely. I would say this is the number one advice I can give.
Thank you, Felix. Anything specific from your side, Tom or Carla, that you would focus on right now, given the current circumstances, developments?
It's an interesting question. I still feel that sort of the adult learning space would be where I would be more interested in. I think K-12, it's definitely, as we mentioned, the sort of the dominant segment. It will continue to be for the future, we think. But at adult learning, I think I think there's a lot of potential there, and there's a huge skill gap among adults, and we know that 1 billion people will have to be reskilled by 2030. So I think that's an interesting space, on a personal level as well. I think K-12 has a lot of interesting things to offer. Of course, I think it's also a very complex market, and I think that have to really navigate this and know the space quite well in order to succeed. And I think corporate learning has some interesting aspects that I would like to explore if I was to find a company. Yeah.
Thank you, Carla.
It's a tremendously unfair question, because I would say, my job is to sit there and just sort of cynically snipe from the sidelines. So putting me on the spot in terms of what I would do is totally unfair. What I do think though is I do think the next big company is going to be European. I think there's that is it's a fantastic market, very stable from a regulatory perspective. In that context, I do have this share Carla's view that maybe a slight skew towards adult learning because it's even safer, but in the context of Europe, it feels a bit more comfortable being exposed across the spectrum. But anything that I think plays into that the aspiration we all have with education, which is to secure better outcomes and to make not only us as individuals sort of more healthy and wealthy, but benefit society. I think it's difficult to see why that wouldn't succeed. But yeah, as to an individual idea, that's where if I knew, I would be doing it.
Thank you so much, Tom. Fair enough. Thank you so much, Carla, Tom, Felix. It was really, really insightful. And yeah, I'm going to briefly hand over back to my colleague, Reese, who can give you a brief outlook on our next and last session of this week.
Wonderful. Thank you very much for your time and valuable contributions, Tom, Carla, and Felix. And of course, thanks very much to Hannes for that expert moderation. As you know, the session has been recorded, so we look forward to sharing it and wider insights from the events in the days ahead. So you can recap any moments you'd like to. And we have one more event today, as Hannes just mentioned. It promises to be an excellent panel. We've got Ben Wers from Brighteye, Ian Chu from Google for Startups, and Temi Adekoya to be from Google for Startups to be moderated by Freya Catty-Williams from Sifted. So we hope to see you there. Starts at 4 p.m. UK, bit of a late one, but thank you very much for joining this. And yeah, I hope to see you in an hour.